Oliver, for many years, Lloyds has been referred to as the taxpayer-backed bank or the bailed-out bank. Increasingly, though, it's just regarded as a bank like any other. On conventional banking metrics, how is it doing?
Well, it's doing pretty well. If you look at profits, one of the most conventional metrics of them all, it's had its half-year results. Profits were up by almost a third, so it's doing pretty nicely, and it's producing an underlying return on equity in the mid-teens. So a very nice return. It is a bank though, so the underlying return of mid-teens, when you look at the statutory profit line, the return is actually just 3 or 4%. So like most banks, it's a very good underlying picture, but there's all kinds of exceptionals that come into the middle of things, which means the actual shareholder return is not quite that impressive yet.
One of those exceptionals, of course, was another big charge for the mis-selling of payment protection insurance. Why is Lloyds so exposed to that scandal?
Well, Lloyds has got a very big UK business, and it bought HBOS, Halifax Bank of Scotland, at the height of the crisis, so that will have increased its exposure. And a lot of banks have got a very big exposure to this insurance mis-selling, and clearly there's very little visibility about when it's all going to end. The banks were saying for quite a few years, oh, well, we're making this provision now, but we think this is the end of it. I think they've all given up saying that now. But there might be moves towards perhaps drawing a line under this and stopping any new claims. Certainly the claims management companies are still trying to sell their services to people. There still seem to be people claiming for this, but for Lloyds, it has been a particularly big problem.
In the good old days, Lloyds was well regarded as a dividend payer, as an income stock. Are we getting back towards that status now? What did they have to say about the dividend today?
So yeah, we're slowly getting back to that state as it's paying a dividend. The yield's still not huge, and the rate at which the dividend will increase will depend on a lot of things, PPI being just one of them, as well as the increase in profitability. So it's not quite a fantastic yield stock yet, but I think that's where the bank is heading. They'd like to be seen as the sort of safe, very shareholder-friendly, reliable company that Lloyds used to be back a long time ago. But it's going to take a long time to get there. The capital situation is looking okay at the moment. It's got a decent Tier 1 capital ratio, but again, the progress of that will depend on profitability and those PPI claims.
So the government well on course to sell out of the bank entirely at some point later this year or next. Oliver, thank you very much.